Welcome everyone in this new educational video where we are going to talk about the beer pennant, because this setup, the beer pennant, is one of the most reliable short setup in futures trading. And if you watched the last video about the bull pennant, so the opposite setup, you already understand half of it. Alright, so let's show and let's see in the chart what is it exactly. It is setup. So we just had a strong impulsive move done. That's what we call, like the past videos, the pull. Alright, then plus a small converging triangle, and this is our pennant. Okay, the volatility is shrinking again, is contracting with higher lows and lower highs. Okay, the psychology behind this setup is that the sellers drove price down hard, and now they are pausing it, and buyers are trying to push back up the price, okay, but each attempt weaker, and sellers coiling for next leg. And when the break is gonna come, bam, strong decline again, and the price is going to move to the downside again and again. So this is just the exact mirror about the bull pennant follows up pull, and bear pennant follows down pull. Alright, it's so simple, guys, and both feature declining volume during pennant and expected breakout in prior trade direction. The key difference is that the bear pennants often resolve faster because fear accelerates selling. So let's take a look at some example, okay? How to identify and trade it. So sharp, as I said, we have a sharp impulsive drop with high volume, okay? So this is our sharp and impulsive drop, alright? And again, he continues. Then we have a small and symmetrical consolidation with declining volume, and you can see, guys, that the volume is declining and are lower over there, and bam, when we are breaking it, boom, the price is continue to going down. Okay, your entry, so you just can take a short when price breaks below this lower boundary of this pennant and confirm with volume increase. Okay, and the stop loss above the highest point of the pennant, so your stop is going to be above this candle. Alright, and the target, you need to measure as usual the pole, and you project it downward from the breakdown. Alright, and the bear pennants during first hour of regular trading hours, especially after a gap down, are particularly reliable. Another thing when bear pennant fail is that if this pennant gets too wide or lasts too long, okay? So too wide or lasts too long, energy dissipates, alright? Or another thing is when volume increases during the pennant, buyers getting, so it means that the buyers are getting aggressive, and expected breakdown becomes less likely, alright? And now let's take a look at other examples again. So we have our pull over there, okay? So sharp and impulsive down move, then the price is shrinking, and boom, when we are breaking it, wonderful bear pennant, and you can just project this pull to the breakdown, and the price is doing the same target. Another example, same. This is our impulsive sharp down bear pennant. We are projected again at the breakdown, and bam, it's working again. A new example over there. So this is the flagpole, and then this pennant is just shaping, okay, during a few hours. Same distance as a flagpole and twice the distance of SL, okay? Bam, so if you just project it, you place and set your target, you set your stop loss just above the highest point, so right there, and boom, you can see that you have, and you could hit your TP. Last example, this flagpole again, this pennant again, bam, you project it, this flagpole to the breakdown of this pennant, and you can see that if you could be able to hold it, this trade, and not be break even, you could hit your TP, okay? But if you want to have a nice money management, maybe you would be break even on this trade after taking some partials. The common mistakes with this bear pennant is that trying to buy inside the pennant thinking it's a bottom, okay? So it's one of the biggest mistake that you can do and retail traders are doing inside of this setup. Another mistake is that entering short too late after breakdown has already extended. So for example, this example is very nice for the mistake that I just said, is that, look, maybe this red candle are shaping very fast and you have not enough time to enter in it, you know? And you don't want to enter badly in a trade too, because timing is really important. So if you missed it, okay, don't run after the price, all right? And so don't enter too low or too late after this breakdown. So just wait for a potential pullback or just pass at another opportunity. And one of the last mistake is that using these bear pennants on very low time frames, for example 1 minute, 5 minutes, a lot of noise can dominate in this time frame. So that's why the bear pennants are so much more profitable and they are working so much more in this higher time frame, 15 minutes, 1 hour, 4 hours, daily, weekly. So guys, to recap, sharp down pole, second tight converging triangle, third declining volume, and the last one breakdown confirmation. Okay, this was the fourth setup that I'm sharing and explaining with you on this YouTube channel. I'll see you in the next one, in this next video, or in trading live stream on the Fiat Profim YouTube channel. Let's go, baby! See you!
Yo, his name is Florian. He's the NASDAQ hustler. Every day he's grinding, making all them numbers cluster. He's a day trader, living life as a thrill seeker. Analyzing charts, he's the Wall Street sneaker. 9 to 5 ain't his game, it's the stock market flow. Tickers on his mind, watching those numbers grow, buy low, sell high, that's the name